This video is sponsored by PelucidFX.com. Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay, let's take a look again at the long-suffering gold market. Well, in our weekly analysis we said that in fact market is forming the bearish pattern on the daily time frame. This pattern is the bearish flag, and inside of this flag market also has given us some hints on the potential turning to the downside by creating some bearish patterns. But today, by yesterday's small upward action, we also have got the Giordano directional pattern that calls the stretch. Stretch pattern is the combination of overbought condition right at the fib resistance area. So that is the double hit on the bulls, because market first stands at overbought, and what is more strong is that this overbought stands right at the fib resistance area. And this, in general, this pattern suggests the retracement down to adjust and to market exit from the overbought condition. The minimum target usually stands at the middle between the bands of the overbought and oversold. And for today, it stands around 1345 area. But this target will be dynamic, since the overbought and oversold levels are changing day to day, because this is dynamic parameters. Hence, the target of the stretch pattern also will change. Currently, since market stands at overbought and the resistance, not good idea to take the long position, I suppose. Well, and recall what we have discussed on Friday. We said that you could try to take the short position with this inside of this pattern, what personally I did. So at the pattern that we will see, this was the evening star on the 4-hour time frame. I have discussed it in our weekly research. I have taken the short, but recall what we told about where to place the stop. We said that it will be more wise to place the stop order above the overbought, because market hardly will reach your stop just occasionally. And since market stands very close to the overbought, the distance of this stop order, the risk is not very significant. That will let you to place the stop in an area that lets market to breathe, and at the same time it guarantees you the sufficient protection, because placing the stop above the overbought condition protect you rather strong. And it's just, as I said, hardly will be just occasionally that market will hit your stop above the overbought and continue move down. If market will find the strength and will pass through overbought significantly to the upside, as it was here with the oversold, you can see that was not just occasional move. That's really was there, changing the sentiment, triggering a lot of stop order, the panic sell-off on the gold market. That's not occasional move. So here could happen something of that sort, but these events happens on market not quite often. That's why placing stop above the overbought and above the 50%, for instance, gives you significant protection and let market to breathe, and you still remain with this short position to the downside on the intraday charts. That's the same idea for today. On the 4-hour time frame, we see that market has erased this pattern. We said that if market will take out of this high, don't be hasty to enter short. That has happened. You can see market has reached the 127 extension of that ABCD pattern and turns to the downside now. Well, the one thing that still worries me is that despite that market stands at the overbought on the right and the fib resistance, take a look at this extension, ABC bottom pattern. Market has exceeded 127, hit 127 here. Here it has tried to exceed it, but failed, returns around now right down. I suspect that market still could proceed to the 1618. And this 1618 creates an agreement with the 50% resistance. Okay, that's still possible. From that standpoint, the placing the stop right above the 50% and above the overbought condition on the daily time frame will give you more protection, and it will be a more logical stop order. Will you take the short position right now or not? That is your decision. For instance, you could try to apply the scale in. For instance, we do not know will market proceed higher or not. From that standpoint, you could take, for instance, small value. Let's suppose that it will be just the 10 part of the standard lot. But here, if market still will continue to move higher, you could add more to your position and place the final stop somewhere in this area. Or you just can wait for potential move to the 50% resistance and the 1618 target. But based on this development, there are some odds exist that market will continue to move higher and still reach 1618. That's mostly because market hasn't turned to the downside as we suggest from the target of the ABCD pattern, although it was logically. And instead of that, it has proceeded to the 120.27 or even exceeded it. That's why I suspect that it really could happen that market could proceed here. That's additional risk. From that standpoint, I think that it's better to apply the conservative tactics. Just wait if it will happen or not. If it will happen, you could try to take short with the stop above the 50% and above the daily overbought. If it will not happen, then you will remain without position, or apply the aggressive tactic. Take the small position right here with the hope that market will continue to move down. If not, if market will proceed high, you add more to your normal trading position in this area, because still nobody cancels the stretch pattern that now still already in place on the daily time frame. That's why its analysis is a bit sophisticated and blurred, because we see that market in general intends to show the downward move, but based on this development, it's still possible that it will start this move from this area, from 1450 area, from that level. That's why it makes the entry framework it's a bit difficult. That's in general typical for the gold market. So that's current my view on the gold market. You can see that this is obviously the retracement, and in general that is the bearish flag on the market. The target, if market will start move to the downside, stands around 30-50 area. It's right here by the stretch pattern, but also I can't exclude the possibility of the retesting of the previous lows. But hardly market will proceed significantly lower, because it now stands at oversold on the weekly and monthly time frame. Reaching of the previous low, this is possible, but exceeding of it, it's a bit under question, mostly due to the oversold condition, as I said. Well, think about this current situation, but in fact, besides of Jordan stretch pattern, we have nothing. From that standpoint, it's a bit more difficult to make the decision taking the short position here. And as I said, that's been said, there's a couple of scenarios could be applied here. This scale in, or the conservative tactics, wait for moving to the 1450 area and see what will happen here. If market will start to turn to the downside, well, you probably could try to take the short position, since market will stand at the overbought on the daily time frame and the 50% resistance. Also, market will accomplish this ultimate target of this ABCD pattern right at the 1618 extension.